Hi, it's Royston Andrew Cumberbatch, and today I'm sharing with you a snippet of my overall blueprint, which is I designed to help business owners make more money, manage their money better, and ultimately invest in income generating assets. Now, this is the 5 modules blueprint, and I'm showing you one of the module, which is really concerned with managing your money better and managing the financial risk in your business. Now, this is of interest to a business owner as well as to an employee who has money and they want to know how to manage it better. Now, risk is obviously a word, but in this module, risk is an acronym, and each of the letters represents a training in its own right. And I'm only going to go through one of the components or one of the letters today, conscious of time. And without this, you don't really know where you are. You don't know if you're making profits. You don't know if you're winning, and you don't know the health of your business. What am I talking about? No, I am talking about statements. And by statements, I mean the core financial statements in your business. And there are 3 core financial statements in business, which is the profit and loss, the balance sheet, and the cash flow statement. Now, today, I'm only going to go through one of those core statements. And this statement is the one that the bankers are mostly interested in because it shows you the health of your business on an accumulative basis. I'm sure that you know which one that is by now, but if you don't, it's actually the balance sheet. No, the balance sheet is very interesting, as I said, to bankers, because it shows what you own, which are the assets, and what you owe, which are the liabilities, and the capital or the equity, which is the owner's stake in the business. Now, the capital is also can be seen as what did the business owner contribute to the business to start the business up, plus all of the profits made to date. Your retained earnings specifically, because you can make some profit, then you pay some taxes, then you pay some dividends, and then you have some retained earnings, and that retained earnings goes into the capital pot. So this, as I said, balance sheet is always on an accumulative basis and is at a point in time. Accountants use a formula to express the balance sheet, which is say assets is equal to liabilities plus capital. And this is a fundamental formula in terms of accounting. And it's one that business owners may not be so au fait with. However, it's very interesting because it really shows you why does the balance sheet balance. And the balance sheet balances because the assets must total the liabilities plus the capital. That's why it's called a balance sheet. It's really a statement of exactly what you own and what you owe. And more specifically, what does the business own and what does the business owe, right? This is from a business perspective. Now, you might be thinking the capital equity, does the business owe that? Yes, the business owe that to you, the owner, and the liabilities is owed to other creditors and other stakeholders, and the assets the business own. These are not your personal assets, especially if you're running a limited company. These are the business assets. Now, there's also another formula just to say capital is assets minus liabilities. So the owner's stake in the business is called the capital, and there's a number of formulas and ratios around things like capital adequacy, which is a very big thing, obviously, in financial services to know how much risk you can take on. I'm not going to go into that in depth. I'm just taking this very at a very high level for now, and because even actually in balance sheet management is a big thing in financial services. Basically, something called asset liability management, making sure that the assets and the liabilities have the same currencies, i.e., they match, and making sure that the duration of the assets match and all that kind of stuff. Look, it can get very complicated, and I might do future training which might show you more complexity around this. For example, even the assets. You can have quality of assets, whether it's a triple A assets or whether it's a double A asset or even whether it's a junk asset or junk investment. But I'm not going to go into any of that complexity now. I'm just going to really go into a quick training just to give you an overview, a flavor to enhance your financial education, enhance your financial intelligence. Now, before I give you an example, I want to reiterate that the balance sheet is always at a point in time. So it's an accumulative statement at a point in time. Now, what do I mean by this? What I mean by this specifically is that your balance sheet can change day on day. Because the assets depreciates or appreciates, and for example, your liabilities change as well. Like when you make payments on your loans, that changes your loan, and profitability obviously increases your capital. And in some businesses, large companies that I've worked for, as I said, they do balance sheet management on a daily basis, and they have a daily balance sheet. In small companies, you tend to have a balance sheet only at the end of the year. You sign it, you file it, and you never look at it again. No, this is not the way to run your business. One of my mentors, says that if you don't know the score, you don't know if you're winning. And if you can't read the scorecard, how do you know the score? And the balance sheet should be used to be turned into a scorecard, into metrics that you as a business owner can really look at and really understand. Now, if you're watching this video and you don't have a business, hang on. I'm going to be showing you what is called a personal balance sheet, where we don't just have your capital, but now we have your net worth. You might be interested in that, so hang on, and I'm going to show that to you. But first, an example of a balance sheet. No complicated numbers, just a straightforward balance sheet example. Now, here you're seeing what the business own and what the business owe. And the business own assets. And assets are things that should be used to create income. Yeah, or in the case of receivables, is income you've already made and you are yet to receive it. Yeah, but investments and equipment should really be used to create income. An asset is not something like your house. Yes, so if you're running a business and you have a limited company, your house is not an asset. These are the business assets. What does the business own? What does the limited company own? This is only in the eyes of the business. Now, as you can see, this totals 85,000, and the liabilities, which is what the business owe, like if it has a bank loan which it took to start up, or if it has what is called trade creditors, which is the suppliers who you took goods and services from and to run your business to make money, or even your payroll, which you may not have paid yet, or your taxes. These are liabilities. And the balance of that, i.e., your assets minus your liabilities, is what we call your capital. And here you can already work that out. It's a very simple formula. Is going to be 20,000. Now, it's a very straightforward balance sheet, as I said. It doesn't go into fixed assets, which are like, long-term assets, which are more difficult to turn into cash, or current assets, which can be easily turned into cash, like receivables, for example, is a current asset. Equipment is a fixed asset, tends to be more fixed. Liabilities can be long-term if you owe them for over a year, or it can be short-term if you're due to pay within 12 months. Now, this doesn't bring in other complexity. As I said earlier, I'm not looking at something called asset liability management, all these complexities. This is a very basic balance sheet for you as a business owner to get your head around. Is it not something that you do once a year and then you just put it away? You should be managing your receivables, trying to make sure you collect your money. You should be making sure your investments and your equipments are being used to make income, and you should be monitoring your cash balances, of course, and of course managing your liabilities. Make sure you have enough money in your bank to pay your liabilities. There are a number of ratios which I can use to show you the efficiency of how you measuring these things, which I may introduce in the future training, and I certainly cover those in depth on my master classes, on my 3-day master classes, and I'll be going actually this in also in depth as well on my mastermind, helping business owners to really understand how they're managing some of these assets. But for now, this is a very straightforward piece of training, just to give you some insight into my own blueprint. Now, let's look at a personal balance sheet through the eyes of an individual. And a personal balance sheet is really around your net worth. What is your net worth? As I said earlier, there are many leaders and influencers who might say, your house which you live in is not an asset. And that's true to a great extent, because your house doesn't give you income. You pay money for it. But as we all know, you can have some equity in your house. which we will look at in a bit. So let's get an example. So here again, I've grayed out your house because, as I said, it's not really an asset, and I haven't put owned. I put value, and I want to just draw the distinction here that with a house that you have a mortgage on, it's really the equity, and you can work the numbers out here. The equity is only 100,000, which is not much, you can say, in terms of a loan to value ratio, right? Look, let's not get into that complexity again. So it's a very basic balance sheet. You have some investments, you have some savings, you have some cash, and you have 535,000. So the value of your, you can call it your assets, yeah. However, you have debt, you have your mortgage, you have your car loan. You might hear a luxury car is not an asset. It does not give you any income. And you might have a loan for different reasons, to put a nice kitchen in your house or to take an expensive holiday, wherever you might choose to go, the Caribbean or Fuji or places like that. And then you have a credit card which you use maybe for other luxury items. Obviously, this is a very simple balance sheet. You can have luxury items, you can have antique items here, which are all assets. You can have even a legacy car or an antique car, which is appreciating in value. A very simple balance sheet, and you can even work out again here what the net worth is. You can see this person is probably doing okay in terms of, they're not really in deficit overall, and they're in a healthy position because they do have an 80K net worth. Obviously, in England, people have billions and millions of net worth. You know what I mean? I mean, personally speaking, I invest in assets. I invest in properties. So I have got some assets which are what I call not residential home properties, which would help to increase my net worth. But obviously, those assets obviously has mortgages on them. In some instances, I do have property which are completely debt free. But then I have other loans and stuff as well, sometimes which I use to leverage to buy other assets. And there's this whole strategy around leveraging your balance sheet, using other people's money to accumulate more assets. Again, I teach this again in my masterclass, and I'll be teaching this in depth in my mastermind, and I'll be learning from different people as well how do they leverage the balance sheet. But for today, I just want to show you this basic training on the balance sheet and just showing you that this balance sheet can be interpreted from both a business perspective as well as a personal perspective. And what's important is that if your investments, which you have an asset manager managing for you, you have to understand investments. You have to understand some of the key risk in your investments. And I do have I have a subsystem even for investments, which so you can understand how to select your investments, how to manage your investments, how to make sure you are getting the expected return that you deserve. Again, all this I teach in my masterclass and in my mastermind events. So look, if you haven't attended any of my events, please look out for it. The next is a virtual mastermind. It's going to be online and it's coming up soon. Can't remember the exact date, but please look out for it. And I'll be sharing this training as well online on YouTube. I'll be going, of course, on my Facebook groups. I'll be sharing this training. I'll be doing a series of training where I will also go into things like the profit and loss statement, which is also called the income statement, which has many very names for different things in business. And I'll also be going through the cash flow statement. As a matter of fact, I have some mentees who I'm even speaking to tonight, actually sharing with them actually some nitty gritties around managing the cash flow statements. If you want to be a mentee of mine, you can contact me. I'll go through this into much details with you, not just the balance sheet, but all the core financial statements. And look, please look me up, Royston Andrew Cumberbatch. Get in touch and let's work together. This is my mission, my vision is to share knowledge and to help you make more money in your business, make more profits. So I want to thank you very much for watching this video. And I want to wish you the very best of success in your business and in building your personal net worth. Bye bye.